2 for the day. It is London times, and it's 5 a.m. Eastern. So, very good morning to those who are joining from the western side of the world, and good evening or good afternoon for those who are joining from the eastern side of the world. It's coffee time for both, but the morning coffee in the western side and the evening coffee in the eastern side. All right. So let's get started without wasting a moment. I think we can see all the action in gold, right? So let's get started with gold first. We just pushed a short trade in the portal around the 29.20. So gold shorts are again active from 2920, and that could be the second wave, that is wave B of uh, of an ABC corrective decline. The only thing that bothers me is that are we are we just being able to catch the wave B, or is it was the correction complete overnight Friday, and is it going to uh, produce another rally or so? This is what looks like, but on the 4-hour chart, we are just around the 61.8% mark. I mean, 2915. Was it 2915? It is 2910, sorry. So 2910 is the 61.8%. It has just exceeded about 2920, and that is absolutely permissible. So yet another opportunity in gold, brothers. On the short side, possibly we are now looking for another 5 wave decline to 2790 or possibly 2760. All right, so that could be the next trajectory or next projection for gold. It was good that we waited, but actually we sold partially around 75, if you remember, yesterday around these times, and now again we've been able to sell the remaining. Just checking the stream, it looks all right. So yes, so all looks good right now, and its potential sell entry around the 2920 in the portal. We have stopped at 2960 this time, and the potential targets are around 2790 and 2765. All right, so believe it or not, I think that looks a good combination in the sense that with respect to time as well. If it takes it took 24th February it started, and 28th February it bottomed out. So it was an entire week of drop. It was 5 days again, all right, and another 5 days from this 4th of March could bring us to 4, 5, 6, 7, and 8, possibly 8th of March or 10th of March. So another four. Symmetricity also matches with respect to time and with respect to the channel. You remember the channeling we had done wave 1 and 3, and extending towards wave 2. That channel is also converging with the 2790 mark around the 7th of March. So 7th or 8th of March, 2912790, sorry, and we should be good to turn long from there. And I think also the RSI would be supporting. Right now it has rallied like a magnet. It has been so sharp, it looks just like an impulse. So we've just got to be a bit careful here. but it's reached the 60% mark. All right, that's a good thing, good sign for RSI. If it retraces or if it gives up 15 points from this price uh, below, if it gets us below 2900 from this price in a flash, that means we are good to remain on the short side, brothers. All right. So this is a nice strategy for gold, and that's why the picking up gold was in the first one in this session. Makes a lot of sense as well. All right, sir. So let's now turn up. I think an hourly chart. Let's have a quick view on the hourly, and also because since we are looking for a pattern, it would not be a bad idea to look at the candlestick chart. Now you see the candlestick is producing an engulfing. It's just about producing an engulfing bearish here. So let's see how the candle suffices for the next hour or so. I think if it produces a huge engulfing bearish back towards 2900, then it would be a particular precise pattern for a potential reversal ahead. All right, so let's go back to the Euro USD where we've seen all the action. Prices rallying all the way above 1.05 handle. So we've got neat little 5-wave rally again. Now I don't know what this guy is up to. I think it's since it is an impulse. Now the only thing we can expect is a corrective decline, correct? And that would be somewhere in the vicinity of 61.8% of the entire rally, possibly towards 430 or so, not more than that. But I tell you what, look at the RSI, please. First, did you see that RSI divergence? And that's an hourly chart. Let's look at the 4-hour as well. Again, the RSI is turning around 60, possibly 65. So it doesn't instill much confidence for Euro to push or continue pushing higher from here back towards the 750 or even higher. So this stalling of Euro calls for at least a pullback towards 430 or so. And 430 would give us yet another opportunity to go long. Remember, we booked partial profits in Euro USD, in the dollar index, and also pound. Dollar index and pound we have booked completely in the portal. We are quite sure about the bullish or bearish divergences in both, and we are going to get an opportunity might be around lower levels going forward. Euro USD we are holding partial longs in the portal as well, so uh, you can trade accordingly, either take partial profits or take complete profits. I think we're more or less going to get a chance around 430 to enter again on the long side. Alright, as far as the wave structure is concerned, we are neatly placed with the minute wave 1, minute wave 2, and minute wave 3 in progress, and it remains to be seen if it is if the third wave, the minute annuity, is unfolding as an extension. That would be very interesting. Possibly, it is quite possible that it's unfolding as an extension. Now let's have a look at the daily chart because I'm still not giving up on a complex pattern being produced by Euro for a wave 2. Now did you see that previous rally all the way above the swing high and then a rapid 3-wave corrective decline? That is something which is still possible. Somehow I'm still not closing doors for a rapid decline for 3 waves uh, for a wave two pattern or minute degree wave two to terminate. Right, as close to 1.04 Possibly, yes, 1.04. That's what we are already projecting, right? 1.0430 already. So watch out for a corrective decline and at least a corrective decline, yes, towards 430 levels. All right. That is the story in the euro. Now going forward, let's look at the dollar index. Please remember the stop loss in euro USD is still not changed, and we are better off placing stop at 1.0200. There is the euro USD. We are better off placing it at 1.02, not there but here. I think we need to go on a 4-hour time frame to watch it closely. We got the first support, strong support at 1.0200 here. Uh, Whether or not it's a leading diagonal, it has barely printed a new high. So I mean, it looks like a 53535 structure again. What do you say? So should we shift this wave 1 over there and wave 2 slightly lower? It is all possibilities are there actually. I mean, if that's a leading diagonal and the 61.8% or 78% pullback remains absolutely possible, and your 68% pullback brings prices back towards. Did you see that 340 zone? That's always a possibility, all right. And remember, it's being merged with bearish diverging scenario as well. So that adds to further confidence actually. Anyways, partial, if you are holding more than one position, you can book partial, stay long on the other side, give yourselves a chance to take or build positions again if a corrective decline is underway. And if you're holding just one position, you can continue holding that line. Even if a corrective decline is there, it won't be more than 300 or 200 points actually. All right. 200 points is actually good enough, 1.03, and that's it. All right, let's pick up the dollar index now. We have booked profits in the dollar index in the portal just before coming live here. And does it look like a 5-wave decline? Yes, it does look like a 5-wave decline. So what it means, brothers, is we might have got wave 1, wave 2, wave 3 down there. Wave 4 getting back into the territory of wave 1 and then 5. So that could be a leading diagonal now. You never know whether it's a leading diagonal or a wave 1 of 3, because it's a 5-wave decline. So it's quite possible that the third wave has resumed, the third wave, and you know what, we can expect a corrective rally within that boundary. Maybe let's find out the corrective boundary within. It's around 107. So a 107 push, and we should be fine to get another opportunity or entry on the short side. But no matter how much you discuss on the possibilities and probabilities of the pullbacks, one thing remains for sure, that right now we are observing bullish divergence with price dropping lower. So there would be some kind of a pullback. Now, what would be the magnitude of that pullback? That is always a mystery. You never know what the corrective patterns are unfolding like. So when they unfold, they will unfold, all right. But in bottom line remains that we need to keep selling on rallies. So if you have booked partial profits, and by all means you can book your partial profits now from all the way from 107.50. We are getting about 100, 120, 30 points already. So partial booking is of course on cards, but if you're just holding one position, then unfortunately you cannot say that you book partial profits. But tell you what, if you're booking partial profits, there is a good enough chance or good chance for a for a pullback towards 107 at least. All right. On the daily chart, it looks like it absolutely looks like another chance on the north side, uh, another rally on the north side, or counter trend rally before the massive decline resumes. All right, so we've touched base with gold. I think gold should be good enough as well. We've sold from 20 in the portal. Okay, it's hovering around 15 right now. That's fine. And let's get back to pound. Pound has barely met its target. The first target we were proposing was 2800, and it's just about 60 points shy from the first target. So you never know if it's wave 4 being carved out. It might take some time as wave 4 unfolds. I think we should remove this path now. But tell you what, look at that. Bearish divergence. And 1 second, just have a look at the hourly chart, please. Do you see a strong bearish divergence here? And that's one of the reasons why we've taken complete profits in pound and in the portal. We have personal level, I really like what I'm seeing here. Uh, almost, I would say more than 9 out of 10 times when we deal with such divergent scenarios and we go towards the trend or the other side, it has always yielded profits. All right, so GBP USD on the short side, not on the short side, but take partial profits at least, please, and give yourselves a chance for a corrective decline back towards 2600. You never know, it drops all the way towards the 61.8% of that particular rally as well, and giving us a chance to re-enter around 24 40 50 zone as well. And I can see a 5 wave rally all clear. 1 2 3 4 and 5 all clear over here. So be I think be a bit vigilant in taking some partial profits, and we should be fine to get an opportunity to get on the long side around the 20 25 50 zone. All right, sir. So that is the story as we move into the London Times. But before we call it a wrap, I think a quick view, because we are going to stay aside for a while in Bitcoin and Solana as well. That guy has, that's a second wave of the entire corrective rally. You see, it's a 3 up and 3 down. Now this guy could go as low as, because when the first wave is a corrective 3 waves, the second wave almost retraces completely. So expect yet another drop toward maybe 81 or even 80 before the wave 3 resumes higher again. So we are waiting for that third wave to resume higher towards 97, and then we will look to sell over there. But if it gets too close, I mean, let's say if it gets around 80, we can go with an aggressive long on the portal with a very tight stop just below the 78 mark. All right, so I will be watching prices because I don't want to take too much of risk, but some amount of calculated risk can be taken on the counter trend side as well. Solana, again, I would be waiting for the same thing to happen, wave C. Had it been a 5 wave rally, it would have been given more confidence, but I think, see this is what happens. When there's a three-wave corrective rally and wave B gets very close to wave A. So, aggressive traders in Solana might yet again go and buy here that's a good risk reward ratio. I think stop loss can be placed at maybe 120. So that's 120, that's 1400 points. And all the way, next rally could be all the way towards 230 as well. All right. But that's still an aggressive counter trend, but there are traders who want to take that kind of risk. So if you are one of them, then that's a good trade. It's a good trade setup on the long side, brothers. All right. And before we call it a pause, because New York session is going to be where we'll spend some more time, we'll just have a look at the Dow Jones. It's silent actually. It is silent. We are looking for a corrective wave higher. All right. We'll touch base in the New York session for all three indices. So let's bring the current one to a pause now, and uh, we'll be back again after about 4 hours during the New York Times, New York session 2. Until then, as always, thank you for your time and please do take care and God bless. Goodbye.